Okay, banking's earnings season is firmly upon us. We had South Indian Bank kick it off for us yesterday. We have Federal Bank, which should be out in just an hour or so based on the data we've been given. And then we'll have HDFC Bank putting out their Q2FY21 result tomorrow on Saturday, as they always do. Now, we already know a lot of things from the recent update that the bank put out, right? What do we know from that? We know that your deposits are really growing at a healthy rate, outgrowing advances. However, advances are still also managing to grow at a fairly decent rate. If I'm not mistaken, I believe advances are growing at around 16% and deposits are growing at around 20%. So both those numbers are very healthy. Retail deposits are also garnering good steam. CASA ratio is also holding up really well. So these are the indications we've been given early on from the update that the company put out. They also bought some loans from HDFC Limited, as they usually do. And that sent a very good signal to the market. Now, we've done a study of what the brokerage polls indicate. So a consensus of all the brokers on the street and what they really think HDFC is going to do this quarter. And let's begin with the NII figure, which is your net interest income, which is your interest earned minus your interest expended. We're looking at a figure of something like 16,000 crore, which exhibits a mild sequential growth and a very decent YoY growth. So NII seem to be growing well because, again, HDFC is only one of the few banks which can grow because they have the capital, right? And also you have a strong deposit franchise. That's what investors keep telling us is very important. If a bank is able to garner deposits, only then will it be able to lend on. So in the case of HDFC, that's not going to be a problem. Now, coming to profitability, you have to look at things like fee income, treasury income. You have to look at the NIM trajectory, right, which might have changed because when credit growth slows down even slightly, it does impact your margins, obviously, and there's a less degree of leverage in the business. So, and I mean operating leverage. So profitability might be a little subdued, and brokers think that this quarter the operating profits, which is your PPP, will come in pretty much flat at 12,600 versus last quarter's 12,800. Still growing decently though over last year's 11,700. So on a YoY basis, it's not difficult to grow. On a Q-on-Q basis, profitability might be a bit impaired, but then if you look at brokers like Nomura, they have a more bullish view and they think that HDFC is going to continue to outperform on the profit front this time as well. Now, operating profit is all pre-provision. Let's look at post-provision. Brokerage's consensus indicates 6,500 crores of PAT versus last quarter 6,600 or last year 6,300. So provisions, that figure might be higher. Let's see, NPA declaration was deferred for a certain point for all banks. So maybe there won't be such a high provision figure, but looking at the recent trend, they have been quite high. So that's something to look out for as well. And then, like I said, we're going to look out for all the various trends with respect to credit growth, deposit growth, outlook on your margins, of course, is very important. And then the restructuring pool. And if at all HDFC has to do any interest reversals on account of the SC judgment, which just came saying that the moratorium, extra interest on interest has to be waived off, we'll be looking out for some management commentary on that as well.